Secrets of volume profile. If you would like to know more, please take the Financial Freedom Masterclass designed for any independent learner to analyze, trade, and invest in the stock market. So, what is volume profile and why is it so important? Well, volume is essentially the fuel which drives price. If price was the car, Elliott wave was the path to your destination. The destination itself can be calculated in various means, fibs being one of them. The fuel which drives the price, i.e. drives the car, is the volume. Without volume, without people, institutions, hedge funds, buying and selling, there would literally not be a stock market. Now, and there are limiting factors to the x-axis volume. This volume right here that we have on the SPY, which is the Spider ETF for the stock market, for the US stock market, this only gives me the volume on the day itself. So I'm on the daily time frame here. If we were to take hypothetically this candle right here, let's just pull it up right here. This candle was produced on the 13th of December. The candlestick tells me the day started here. At some point during that day, it went down a tad, then it rallied all the way up, finished on pretty much on the high of the day, but there was a small wick. I know, based on the x-axis volume, the volume on that day was precisely, let's have a look here, 93.27 million. Now, that is limited knowledge. Whilst that knowledge is great, and that's still a lot better than a lot of people who analyze charts without looking at volume, that only gives me some of the information that I need. What I don't understand is on that day, or a collection of days, how much volume was conducted at the lows, how much was conducted at the middle, and how much was conducted at the high. That becomes very, very important. It's literally impossible to deduce that information from the x-axis. That's why we like to look at volume profile, and specifically the volume at price. I need to know how much volume has been conducted at each price level on the y-axis, right? So that is where volume profile completely changes the game. It takes it one step up from just looking at things arbitrarily on the x-axis. It's all well and good, 93 million on that day. Very powerful, almost bullish engulfing candle. Very, very powerful. But it's not telling me what occurred on the y-axis. That is where we use volume profile. I'm getting the volume per price level. How much was conducted overall at 445, 451, 458, 473? And that is very important when it comes to auction market theory. There are two axes here. There are three variables that we always talk about: price, time, and volume. Just giving me the whichever time frame x volume, that only gives me half of the information. I need to know the volume at price. That's where we bring in the volume profile. Now, if we go on to indicators and on my favorites here, we're not going to go through session volume here today. You can have a look at the masterclass. We're going to go through visible range volume profile as well as the fixed range volume profile, and we're going to speak about how they differ. So let's click on visible range volume profile. As you can see, automatically TradingView has now populated the volume at price. So whereas this is the x-axis, various 93 million, 119, 86 million. This is telling me how much actual volume conducted per price level. Now, to me, this resolution is too large. I need to increase this resolution because I need to be more precise. Currently, this is looking at the volume conducted within a $2 price level, and obviously the SPY goes to it goes to 2 decimal places. So how do we increase the resolution? Usually I'm increasing the row size to anywhere between 150 and 250. So let's go halfway house. Let's go 200. And as you can see, the volume profile has now increased massively. So whereas prior to this, each sort of, each histogram bar, if you will, was covering $2 of price. Now it's only covering about half a tick. Now, if you wanted to go extra precise, you could go even more than that. You could go to 250, but for the purpose of this of this educational video, we're not going to, right? So let me just delete everything off this screen, just so we have the volume profile. Now, look at how valuable this information is. Automatically, we've identified, without doing much else, there is a low volume pocket right here. I was not able to deduce that really just from looking at the X volume, right? This is telling me however much volume took place here at 454, there was a lot of volume taking place. If I was to have a look at the candles, right, I can see there's a lot of aggregated volume taking place within these 6 bars, but I don't know exactly what price most of the volume was at. Was it as low as 454.21? Was it as high as 459? That $5 difference makes a huge difference when you're trading. You need to be more precise, especially if you're operating with limit orders. So let's move on. That's the visible range volume profile. Why do we call it visible range? Well, it's literally everything you can visualize in your screen right now. Right now, this is taking the visible range from the 29th of August. If I scroll on my mouse, you will notice this volume histogram changing. Scroll down and you can see it changing. Why? Why is it changing? Because the visible range has changed. I'm no longer just seeing from 28th because I've zoomed out now. I'm now taking it from the 16th of March 2023. If I was to zoom all the way in, is changing once again. Why is it changing? Because I'm only visibly able to see 15th of November 2023. That's what visible range means. It sounds very obvious, but it's important to understand what that means, especially when we go on to fixed range volume profile. So what are the settings that we like to use? Well, usually it's anywhere at least 150. I need some resolution there. I don't change this. There's no need to. Up and down volume. I'm not interested in up and down volume, so that may as well be total volume. It doesn't really matter. Up and down, I simply prefer the contrast. I'm not interested in how much volume took on the up bars, how much volume on the down bars. That's too complicated. There's no need to overcomplicate your trading. I simply keep it as that because I like the contrast of yellow and blue. That's the only reason. You can change that to any color that you like. This is the value area. This is where one standard deviation of the volume took place. Now, as we know in maths, one standard deviation is actually 68.2. Well, for the purpose of the stock market, we round that up to 70. So 70 is the idealized value area that we have always used for the last 50 years when the invention of volume profile really first came to fore through various people who found out about volume profile, John Dalton et al, and we've always used 70 really. There's no need to change that to 68.2 because then you're going to differ from what everyone else is using. But that's why it's 70. It should be 68.2, but is rounded up towards 70. So it's pretty much one standard deviation of the volume profile. If you were to look at it on a Gaussian distribution, which as we know, the normal bell-shaped curve, that's the mean. That's one standard deviation this side, one standard deviation this side. Very, very simple. It's roughly 70%, which basically leaves 15% on this side, 15% on that side. Now, that's the first setting. Let's go further into it. So let's change that to up and down. Doesn't really matter. I like 200, 150. I like some resolution because I need to be more precise. I don't really change anything else. The actual values, they are meaningless to me. I'm looking at this from a visual perspective. The values are not important to me. The value area high is the top range of the top side of the one standard deviation, and the value area low is the bottom side of the standard deviation. Now, you can actually make this up by you can actually understand where these numbers are just by visibly looking at it. And if you were to look very closely here, it's quite dark in its color, and then it becomes less shaded. So I automatically know the value area high is around here. If you're not able to see that visibly, what you can do is increase the resolution here to make it obvious. Now, very clearly around 472.13, the shading becomes a lot less shaded. I know automatically that's the value area high, and I can prove that to you. When I click this button here, it should pop out with a line to mark that off. Okay, some people look at the colors, other people want to have the lines. That's okay. And likewise to the downside, likely the value area low is around 448, and I can place that on here, and there you go. Now let's keep it moving. We've added the value area high, the value area low once again. Let's go back to the bell-shaped curve. Imagine this volume profile is kind of like the bell-shaped curve rotated anti-clockwise 90 degrees. So imagine I've rotated this 90 degrees. It basically comes out like this. That would be one side of the range, the other side of the range. Okay, so that's the value area high, that's the value area low. You need to look at the volume profile as a Gaussian distribution that's been rotated 90 degrees anti-clockwise. Okay, that's when it becomes very, very simple. Okay, and that's why we call it the value area high, value area low. Now, there's one thing that we haven't quite gone through, the POC. What does that mean? That is the point of control. So in maths, to work out the average of anything, any set of numbers, there's the mean, the mode, and the median. This is like the mode. The most is the most of something. Okay? So what are we referencing here? Well, we're not talking about time here. Time is order blocks, and that's something different we discuss on the masterclass. Here, it's the mode of the volume, the point of control. At what price level on the y-axis has the most amount of volume taken place? Now, how would we know this without TradingView telling us? Well, very simply, it's the largest histogram, which is basically extending towards the left hand side. You can very clearly see this bar is way higher than any other bar, and this is very important, mind you, because this is deemed in the Gaussian distribution as the midline. So the standard deviation, the value area high and low, actually mathematically are deduced from here. Now, you don't need to know too much about the maths here, but it is important to understand. Should the VPOC had been up here, the value area high and low might have been something like this. Okay, so that is the midpoint whereby we start to calculate the value area high and low. That's why it's the mode. Once again, I'm on visible range. Let me zoom out and show you how this VPOC is going to change. Do you see how it's jumped down to 435? Why has it done that? Because I've zoomed out. I'm now looking visibly at everything since July 2023. Okay, good. Let's keep it moving. Are there any more settings here that we need to know about? There's the developing POC and the developing VA. For the purpose of this simple educational video, we're not going to discuss those two. Those are discussed on the masterclass. I think it's too much for this particular video to discuss that. Then you got labels, then you got values. That's okay. I don't really mess around with that. Obviously, for some people, you might want it on the left. Others, you want it on the right. But really, the way you should be reading a chart is from right to left. That is ideally how you should be using it. We're more interested in what happened recently, that you should train your brain to read from right to left. So I find it easier to look at things with the volume profile on the left hand side. Besides, when I use fixed range volume profile, which we'll discuss on the next video, I like that to be on the left, just because that's more fixed. It's unable to change, and it's really reflecting on price movement in the past rather than what is to come, because we've fixed the points, we've anchored the points. And this I don't change. I'm not really fussed about this. Okay, good. So that is how we set up visible range volume profile. Those are the settings. Now, how can we use this to our advantage? Well, in auction market theory, the most important ideas that we need to know of is, once again, where most of the volume has been transacted, often known as the fairest price to do business, right? We know that particular price point will be a magnet for price often to bounce to or to retrace back to, right? So if we had a large VPOC here, this was probably the VPOC even prior to this leg down, but it's interesting how price ended up coming right back down into that, and now it's shooting off. It's kind of like tagging up when you're playing baseball, right? The price does not move in a straight line. It needs to have the comfort of knowing it can retrace to a certain level, find support there in terms of bids, and then it can rally on and try to establish value elsewhere. Right now, you can clearly see the S&P wants to go to 5,000. It's happy with the value down here. It's built up a lot of support, a lot of price, or what we deem as value, and now it's trying to establish that value elsewhere, much higher up, 5, maybe even 6,000. And that is how price moves. Now, if this is the value, price, ideally, as price is moving up, you want confirmation from value, which can be seen on the fixed range, on the session volume profiles. That gives us the comfort of knowing we're in a strong trend. When you see price going up and value not really following along, then we have a problem. It could lead to a situation where it's telling you a retracement is coming back. Once again, that's more session volume profile, but we discussed that on the masterclass. Okay, so but that is something to manage there, and value is deemed by how much volume took place at what price, and also time. There are two ways you can look at it. For the purpose of this video, we're going to be looking at volume and not time, but time can also be used. The more time you have spent at any level on the y-axis, the more value has been built up, support has been built up, and the price is comfortable at that level, then wants to bounce off and shoot off and go to another area where it wants to establish value. That's exactly what the S&P is doing. That's why for this S&P to now pull back, I don't think it's possible. It's built up a lot of value here, and now it wants to go elsewhere. Now, let's investigate this a little bit more. Right. So the fixed range volume profile. The only way I really use this, because I'm more into session and perhaps fixed range, is that I need to know on the larger scale, where has this S&P found support and where has it found some resistance, okay? And as you can see here, also bounced off this low volume node. Now, without you knowing there was a low volume node there, it's impossible. You'd only have to rely on price and fibs and Elliott wave, but we need as much information as possible. Price often wants to reject from areas of low value because there's no volume there. The job of a market is to facilitate trade. How can any asset in any auction facilitate trade at an area where there are no buyers or sellers? That's why price rejects very violently off of these areas. So low volume nodes are something that we often look to as targets, either to enter or to exit, because we know likely price is going to reject from those areas. Gaps are the same thing. Price doesn't like gaps. It will reject from a gap or it will go straight through it. Now, often it doesn't go straight through an area of low volume straight away. It often tests that area, pulls back, then rips through, retests a support from the other side, then it does. Often it does this. But knowing where the low volume areas are very, very useful. That's why the S&P rejected very violently from this area. And in fact, that was the low of the entirety of the last 1.5 years. How am I supposed to know there's a low volume node there without having this? So this is more not so much for trading, it's more longer term swing trading where I know where the low and where the high volume areas are. The high volumes are areas where price wants to get to, because trade is best facilitated at areas of high volume. This is obviously the VPOC, but you could say that's like the second VPOC, that's the third VPOC, and that's probably the fourth VPOC, right? So price rejected off a low area, found a lot of support there. And once again, you can see it on the x-axis. There was a lot of cumulative volume taking place around here. But the exact level most of that price was taking place was 395. It wasn't 381 or maybe 420 or so. So we need to know, generally speaking, where the ranges are, the upper side of value area high, the lower side of value, where the most amount of volume was conducted, and the low volume areas. There's a lot of money and successful trades which can take place if you know where the high and low volume areas are. And that is what we call the visible range volume profile. Now, in the next video, we are going to go over the fixed range volume profile. So I'll see you guys on the next video.